make sure you.
Oh, yeah, I'm sorry, YouTube. Without YouTube, right now we're at 13,000. I'm going in his team now.
That's right. So make sure that you know, I always like and enjoy putting other people who are actively working, educating people, and that's all I practically I get is strategic partners who are influential, who are out there making it happen for people. So that's why, you know, thank you for letting me be here. But also, you understand that you have 13,000 people who are also
awesome. I'm their fan now.
Yes,
this is great.
Correct.
So right now we're at Culture State, which is our brokerage company by Mr. Luis Leiva, and thanking him for allowing us to have this here is great. And we also have Cuban food for the ones who are here, so you guys are missing it from Yoli's Cuban Cafe. So it's awesome. We have empanadas, croquetas, pernil. We have everything. So. And we also have this. Look at this, look at this. One of you could take this home.
Oh.
You see? See what happens when you guys don't come? So without further ado, allow me to introduce Mr. Gizzy Credits.
My people, how are you? Gizzy Credit here. People find me on YouTube or social media. I am on social media every day because in this credit repair business, it's all about how many people can see you on a daily basis so you can build trust. So people contact me and they trust that I do the job because they see me every day. I built my business online from my house. I've never had an office and I've been doing this since 2009. I enjoy doing these seminars and educating as many people as I can because this business has a bad reputation. People doing scams, people taking your money, not coming through for you. So I'm, you know, I've been told that I'm one of the good guys. Thank you. But in all honesty, it's all about educating the customer to what they want to do with their credit, whether it's to get a car, get a home, get a business loan, get some new credit cards. I enjoy taking people who are down and out with their credit and start building their credit so they could start living life to their maximum potential, because let's be real. In the United States, it's all about credit, all right? So they don't care what nationality you are. Well, some people out there do. Lenders, make sure that, you know, we don't deal with those type of lenders. But then again, you looked at your credit, all right? So your credit is the most important thing in the United States. Make sure that that is something that you work on, because whether you want to get an apartment or you want to get a low interest rate vehicle, you need to have good credit. So let's get into our presentation. Don't mind me, I'll be sitting down. And this, I'll just click. You guys have this presentation, and many of you don't have it. Sorry about that. Hello, Stacy. Hi, Stacy.
You just keep clicking this one, and it'll bring you to the next slide.
Okay. So, like I said, right now, credit. I love that light. That light. Yeah. So like I said, credit pertains to everything in all areas of your life right now. That's why I have this picture right there. It's all about for sale, credit, buy a house, mortgage rates, interest rates, credit market, your employment, especially for people out there in DC, DMV area who are trying to get a government clearance, or are right now a police officers who are trying to move up and be detectives. They look at your credit. So I mean, you can't have bad credit even if you are in government jobs. And in order for you to get government jobs, you also need to have some type of credit as well. So credit is everything right now. It's a very popular topic. So we're gonna get into what is credit, what it is, and who can it help, and what's the difference between you know, people actively doing the right things in this service and people doing the wrong things. So credit repair is actually the legal way of fixing any inaccurate information that is on your credit report. Basically, anyone can be helped. People who finish coming out of jail, have no credit, who still have some inaccuracies on their credit report, people who are affluent, who may have a judgment on their credit report, even if they make $10 million a year, need the service. People who want just an apartment or move forward in life, they need the service. So anyone can benefit from credit repair. And what we utilize, the tool that we utilize to fix the inaccuracies on your credit report is the Fair Credit Reporting Act, which was enacted in 2007 to establish boundaries for your to establish boundaries between the creditor, someone lending you money, and the credit bureau itself. Okay, so I'm gonna get into it right now. What's the difference between what is a credit sweep and what is credit repair? Now, I know a lot of you online may know or see what is a credit sweep, but a lot of you here may not know what that is. Maybe this is the first time hearing what is a credit sweep. Credit sweep is actually what they call in the industry as doing a police report and putting that everything is fraudulent on your credit report. You thinking that if you put everything fraudulent, that everything is going to be removed from your credit report. Basically, that's not credit repair. Credit repair, again, is removing inaccuracies from your credit report, or whatever is whatever is inaccurate needs to be removed from your credit report. But what happens when you send a police report? When you send a police report, that's what you send, a police report. It's not repairing anything. Maybe you remove all of the negative accounts from one bureau or two bureaus, but there is always one bureau that's still going to have a lot of negative accounts and is going to be held to remove those negatives. I get customers who have done credit sweeps who are doctors, and they get fooled by, I'll give you results in 30 days with this credit sweep. And when they find out that they get placed in a worse situation than they are right now because they did a credit sweep, they understand that this service is going to be more of a process for them. So basically, be on the lookout for when people promise you fast results or guarantee you results in this business, because there is no guarantee in the credit repair as far as me guaranteeing a time frame for you. So I can't really say, hey, I'm going to put you in a better situation and I guarantee it that I'm going to put you in this better situation in 60 days or 30 days or 2 weeks. Now, many of you have seen my videos who I've given people results in 1 day and was able to remove everything from the credit report in 1 or 2 days. But that necessarily doesn't mean that everyone's going to be that way. All right, so always understand that there's a difference between credit repair, there's a difference between credit sweep. A lot of times you also get placed in the consumer affairs section of the credit bureau, because every time you send something that is fraudulent or send that something fraudulent on your credit report, they always look at it and take it seriously. The credit bureaus, although many people think and they think it's a bad thing to, oh, they don't remove this, they don't remove that, they're actually there to protect you and make sure that you are being protected. That's why if you get a minimum of 5 to 6 negative accounts removed from your credit report, they place a small fraud alert on your credit file, and that is for your protection. You don't see it, but internally they know that, oh, this person has gotten 6 negative accounts all at once removed. What has happened? Let's place a minor fraud alert on the credit file, making sure that he's protected. So understand that. So police reports, someone telling you that they can do things fast, doesn't work that way. Credit repair, legally, the way of doing it is a process. Many people can get results in 30 days. Well, by law, they get results by 30 days. But what I mean is, some people may get everything removed in 30 days, and some people will be more of a process. Okay. So the tool that we utilize, the Fair Credit Reporting Act, is designed to set parameters for lenders and borrower collection companies as well. and basically it's to keep everyone honest. So we have three types of credit bureaus: Experian, Equifax, and TransUnion. Okay, depending on the type of a company, they may pull either one or two or three credit reports, all three of them. So Experian, Equifax, TransUnion, they each are owned independently. They each do things independently, but they still need to reply to you in 30 days by law. So they all have all three of them have their own way of coming up with a credit score. That's why you're always going to see 3 credit scores on your credit report. They're going to be different. You're going to have a high score, you're going to have a middle score, and you're going to have a low score. Your middle score is always going to be your FICO score. So when someone says, so what's your FICO? So you don't say, well, my FICO is 750. Yeah, but that's the highest credit score that you have on Experian. What is your Equifax? Oh, I got a 650 on Equifax. What is your TransUnion? Oh, I only got a 602. So your FICO is 650 with Equifax. Okay?
I have a question real quick.
Sure.
So are creditors required to report to all 3 credit bureaus, or is it just 2 out of the 3, or do they have to report to the 3 credit bureaus every
They
3
have to
days?
report to all 3 credit bureaus so that they could report on your credit report that you're actively making payments to them. All right, so it's
So what's the big why the difference in scores between each credit bureau?
because each of them has their own algorithm of coming up
Okay.
with basing your credit scores on your age, the age of the account,
Got it.
the type of account that you have, how long of payment history you have on that account, the limit on that account towards the balance.
So it's
that-
algorithm based.
It's algorithm based for each individually.
Okay.
But as long as you understand that, you have more of a better understanding when you go to finance anything, something.
So between you checking your own credit and a lender checking your credit, it's always different. Why is it different from you pulling it from different places? Your Credit Karma might give you one, your bank might give you a different number, and then you go for a loan and you know it's way lower than you actually think it is.
Okay, that's because Credit Karma is bogus. And Credit Karma sucks. Why they
Just
suck?
like Zillow? Like Zillow?
Like Zillow,
Oh, man.
okay? They basically say they're free, but what they get paid on is whatever amount of whatever marketing they get placed on the bottom as far as, oh, hey, look at your credit scores that are 680. You qualify for this credit card. So once you click on that card, they get paid for that. But aside from that, they're owned by TransUnion. And TransUnion never really came out with a viable credit scoring model. So you have Experian and Equifax, which are the bigger ones, especially Equifax in the South. I know a lot of people get a lot of customers from the South. A lot of businesses run Experian and TransUnion, and they're mostly in the East and West Coast. And TransUnion also is more business related as well. A lot of Equifax credit unions that only run your Equifax report. So that's why when you go to these credit monitoring websites, they're going to get a different, because each of them have a different credit scoring algorithm of how they're going to come up with a credit score. Yes, your Credit Karma will show you a 740 credit score. You're so happy. But when you go to Equifax.com or Experian.com, you're going to see that your score may be different. Even if you go to Experian.com and Equifax.com, those are all personal credit monitoring websites. The only real credit scores that you are going to have are the credit scores that are ran by a commercial lender. So if they come to you, or they go to Eric Estevez to run their credit because they want to buy a house, they run a tri-merge report. That tri-merge report is a commercial credit report, and is only going to base your credit report is going to be based on what mortgages you've paid in the past. If you don't have any mortgages, they're going to base it from what installment account you have, and installment accounts are either jewelry lines, furniture lines, vehicle lines, lines of credit. If you have revolving accounts, which are all credit cards, any major or credit, consumer credit cards like Kohl's credit card, JCPenney credit cards, they'll base it on that. So that's why you're going to see different scores, because your real credit scores are only going to be ran by a mortgage lender, a car dealership, and a credit card company. When you go and get insurance, they also will do a soft pull, but that's also based on commercial as well. But no, I hope that answered your question.
Absolutely.
Okay,
We got
all right,
like
cool.
5-10 more minutes.
Oh, yeah?
I know you can do all day long.
Oh my goodness. You gotta let me guys know so that I could finish class for you guys. If any of you guys want to ask me questions during the process, this could be a forum as well. So how the depending on the type of company pull or all three bureaus, so that's what I'm telling you right now. With when you go for a car loan, they're gonna pull installment accounts. When you go for a credit card, they're gonna pull revolving accounts to see if you have good payment history with them. When you go for a mortgage, they're gonna pull your mortgage accounts and see what you have there. So, oh, okay. So, how does payment history impact credit score and how long? Well, payment history is impacted. Let's say, okay. Let's say Sophia, since she has the white hair, she's considered to be the oldest one in here. And let's say I'm 22 years old. And let's say I'm 22 years old. But let's say Sophia is a young-looking 40, right? So what happens is that if she has a late payment on the credit card that she has for 15 years, and I'm 25 years old and I have a late payment on a 5-year-old credit card, my credit scores will go down more than her credit scores will go down because she has more of a longer payment history. So if you have a longer payment history, your credit scores, if you have a late payment or something negative comes on, it's not going to impact you as much as someone with new credit. So that's how long that's gonna take. And the difference between a hard pull with a mortgage pull, auto lender, insurance company, that's typically a commercial credit pull, which will cost you points in credit scores because you're allowed to have in the United States, we know that everything is based on credit. So they're gonna see that you're gonna have 6-5 pulls on a yearly basis. The bureaus say, hey, you're allowed to have 7 to 8 pulls per year because I know we're in America and everything is credit score driven. At the same time, depends on who pulls your credit. So let's say you go to Eric Estevez and you have 10 inquiries for a credit card and 10 inquiries for an auto dealer. When you go to a mortgage company, you don't have any mortgage pulls, so they're not going to question your pulls, your inquiries. So let's say you go to a credit card company and you have already 10 credit cards and you want to apply for another credit card, then you're looking credit hungry and you may be denied because you have too many inquiries on your credit report. Aside from that, a hard pull can reduce your credit scores, especially if you have negative items, a collection account, if you are maxed out on your credit card. An inquiry can reduce your credit anywhere from 1 to 3 points, or even 3 to 5 points if you have like a 600, 500 credit score. When you're looking hungry, your credit scores drop more. When you already have 750 credit scores and you run 2 inquiries, it's not going to affect you as much. Okay? Softwatson.equifax.com. Bureaus, they don't, oh, this is the myths about credit repair. People talk about if they don't respond between 30 days, by law it has to be removed. By law, the bureaus always going to respond 30 days. Maybe people who see my videos on YouTube with me giving people results in 2 days, 3 days, they think that everyone's going to get results like that. Well, everyone is different, but by law, the bureaus are going to contact you in 30 days. whether I do it online, which leaves out the mail time that it takes for a dispute to go over to the bureaus. Once the dispute is at the bureau, the dispute needs to be recognized. So maybe you send it today, it gets there on Monday, but maybe the dispute process starts on Wednesday of that week. Then you gotta wait 30 days from there. Then you gotta put mail time for the dispute to come back to you as well. So always remember that. People should claim that everything is fraudulent on their credit report. That's the worst thing that you can do. That's like another myth. And people who close out zero balance credit cards. Look, I know many of you have had it with credit cards. You're maxed out, you can't wait to get out of debt, and you close that credit card. Listen, I'm 25 years old, right? Let's say Sophie is a young looking 40, right? If Sophie has a credit card that is 15 years old and she's had it up to here with credit cards, she gets her tax return, she pays everything off, all right? And then she says, I'm gonna pay this off and I'm gonna close this account. She has just messed up her history of payment by closing an account that was weighing so much on her credit scores in a positive way. So once she closes that card, she only has 2 more cards that she's gonna base her credit scores on. But those 2 cards are 5 years old. So the main card that was helping her with her credit scores was her 15-year-old Capital One and Bank of America. And once she closes that, her credit scores may go down because now that history is down. All right. So you definitely don't want to do that. Maybe you want.
What if it's zero balance? Like when you close when you pay it all off, right? And you don't want the credit card no more. So what you just leave it open?
Okay. So what type of credit card?
I don't know. A credit card. I don't see. I'm not that good. Let's call it a credit card. I don't know.
All right. Cool. So there's different type of credit cards, right? You have bank credit cards, and you also have your Kohl's, your JCPenney. Huh?
Capital One, regular credit card.
Okay, regular credit card. Well, those credit cards have more of a weight than your consumer credit cards. And when you have those type of credit cards, you may want to close the consumer credit cards because they carry too much high interest rate. They get you on, November, December with get 10% off with your whole sale. You run an inquiry and you get this credit card, but it comes with a yearly fee and it also comes with high interest rate if you use it. So you may want to close those cards, but the cards that you actively have on your credit report, those are the cards that are actively weighing or giving substance to your credit scores. You see, whatever is on your credit report and you have a balance on it is good. Depends on how high of a balance you have. That's why we recommend people having 10 to 30% of the limit that they're using to make sure that the credit report is bouncing, to make sure that it's active, to make sure that if any time you could reduce it, like right now you say you have 0 balance, it's there, but you know what? That history is also there of you having that credit card for 5 years. Once you remove that history on that card, that's it. Your credit scores are not going to be based on that credit card any longer. That's why I don't recommend you close it. If you're not going to use it, but maybe you want to put gas, $25, $30, but pay it off.
No, like what if you don't use for a long, say you had it for a year, but you never used it, it was just 0 for a long time, and you just I don't even know where this card is. You just close it up. You can't do that.
Some lenders will close it if they don't see any activity. But if I were you, if I have a credit card and I haven't used it in a year, I would use that card.
Yeah, so I this past Christmas, they were going to close my Target card, right? Because I haven't used it. They sent me a letter in the mail, so my wife took care of that problem, right? So you got to make sure if you keep it at 0, they're not reporting payment, right?
Yeah.
So going back to that 10 to 30% limit.
Credit utilization.
If your goal is to improve your credit, keep it at 30%, right? If you have $1,000, right, on the credit, keep it at 300%, even if you pay the minimum, right? But now every single month, those creditors are reporting to the 3 credit bureaus. That's going to boost your credit. right? So don't close it out, because when you do close out accounts, it's gonna in the beginning it's gonna negatively impact your score, right? But you know, you got if you have it, right, use it. Don't use it to the max, right?
Remember, okay.
You said they close it out, so if they close it out, then is that good or bad?
They'll give you a warning before if they'll send a letter to you, or they try to communicate with you to let you know, hey, if you don't use it, we're gonna close it out. So if you don't, they will close it, right? So you got to make sure you're on top of that.
Remember, in the United States, it's all give and take, give and take. They want to charge you their interest while you get what you want, which is, credit, right? Anything that you want. Go ahead.
So to expand on that, so let's say you have two bank cards, one Capital, one Bank of America.
Mm-hmm.
One you just opened up a year ago, so same example, and the other one you have 5 years.
Mm-hmm.
So is it okay if I just keep the 5 year, the Bank of America one open for the one that I have for 5 years, and then close out the one with lesser credit history?
Is it okay?
Is it okay, or should I still keep?
Depends on what are your goals in the next 6 to 3 years. 6 months to 3 years. Because if you want to get a mortgage, you need to have at least 3 accounts on your credit report that are bouncing, that are active, that are doing something for you. If you have only one, you have very low credit, and you have what is called in the industry a thin credit file. Okay? So when you want to have a thick credit file has mortgage, installment, revolving, your consumer credit cards, if you choose to have those, lines of credit, those things. That's a strong credit report, especially if you owe 10 to 30% of the credit utilization on those credit cards. Just like when you go get a mortgage, everything has to be working. You have to be working for 2 years. You have to be paying taxes for 2 years. You have to have money. Plus, you need to show that you are responsible. It's just like that when you go for a vehicle loan. Just like that when you go for new credit cards. Okay? So, I only have a couple of minutes left. How you can control your credit cards? Well, the best way you can control your credit is by just paying down your credit cards. That's the only time where you're going to boost your credit scores organically. All right. So if you want to boost your credit scores or add what I say steroids to your credit scores, you can get added as an authorized user to someone's credit card. All right. To a family member or a friend, they can add you as an authorized user on that credit card. The history of that credit card is $5,000. That credit card is 5 years old. The history of that card being 5,000, 5 years old, transfers over to your credit report, giving you a minimum of 20 points worst case scenario in boosting credit scores. Let's say you don't have any negative accounts in your credit report. Then if you add that credit card onto your credit report, your credit scores will go up 40, 50, even 60 points, especially if that account has a long history. Sure.
Question. Is it authorized user or joint user? Because I remember that mortgage companies didn't want to allow authorized user accounts.
Okay.
Because people were doing that. Would joint be the way to go?
I haven't heard anything like that.
Maybe
Yeah, Eric?
Yes. Yes, I'm here.
He has the question.
What's the question?
Will the mortgage company allow authorized user accounts or only joint user accounts? Because I remember there was a time where people were doing just that, adding authorized user accounts just to build credit and then go for a mortgage.
Yeah.
So I remember there was a time when they weren't allowing that. Is that still a thing, or is it?
Yeah, well, the thing is, we need to have the credit scores, so that's a great tactic. The authorized user is still something that we can do to build credit. So I work with people. Sometimes it's not like hey, I'm ready to buy a house tomorrow. Like sometimes this is a process, right? So I was working with a family where the grandfather wanted to refinance, and we were going to save him $700 a month in his refinance. But the only way he can afford it is if his grandson was put in the mortgage. His grandson was 18. He had worked part-time for 2 years. We had to use his income. Didn't have any credit. So what do? Right? Authorized user. Right? So we took a credit card that wasn't maxed out, because that maxed out credit card is also going to show on the grandsons. Right? So we said, okay, well, what credit card do you have that you don't have as much utilization? The 30% is that ratio. That helped. Right? So we have that one. Second thing we do is we get secured credit cards. So we tell the individual, we say, listen, go to your bank, put $300 down in your Bank of America. They're going to give you a secured credit card. Once you use that, like if you put $300 down, you're going to be able to use $300 of credit, right? You can use that, and every time you make a payment, they're gonna connect it to the credit bureaus every 30 days. So now you have 2 credit cards on your name, right? And that's a trick to build credit. I'm building credit right now for my 15-year-old. I want to start building credit for my 15-year-old daughter, right? So that way, you know, when she's ready, right, she'll have a great credit score right off the bat. So the thing is that you can actually build credit by authorized user by doing those joint accounts and whatnot. But they have to be in good standing, right? Because if it's in poor standing, then it's also going to reflect in that person.
Oh yes, and it also needs to be paid down 10% or 3%.
Yeah. So you want to do that now. Once you do that, and it took. Here's the thing: it's a process. It didn't happen right away. It took 6 months for this person's score to populate. Because if you don't have any credit at all, it could be less than that. But the credit bureaus have up to 6 months to show a score. Right, so the minute that we showed a score, we were able to refinance. You know what I mean? And his score, I think it was like a 692, right off the bat. You know, with three credit cards, we had the secured credit card, we had the authorized user, and then after 60 days, then he applied for a small, you know, consumer credit card, right? And then with those 3 cards, he's almost at a 700 off the bat. So those are easy. So that just takes a little bit of time, right?
It's just a way for you to restart the process of you building credit.
Yeah.
Until you get to the big boy $20,000, $10,000 credit cards, which you can get to. Okay.
So, going off of what you guys just said, I have a 15-year-old that's been an authorized user on my cards for a couple of years now. So by the time she's 18, she's gonna have a long history. Credit history. I don't want to co-sign for a car. If you miss payments, it's on you. So my job as a parent, I'm starting to help her build her credit and add it as an authorized user. Also, my parents, they had their score in the low 500s, and I added them as authorized users. They're refinancing their home now. They're in the high 6s now. Just because I added them as authorized user to my credit cards.
But that's when you have to talk to like a credit specialist, because every situation is different, and it's a puzzle, right? So we have to look at it and we have to see what is it in this person's credit history that we need to do in order to improve it, right?
You also have to be careful, because like my mother called me, you missed the payment. I'm like, no, I didn't miss the payment. It's like showing on my credit. I'm like, there was something fraudulent on my credit that I, you know, had to call the card and have them take care of it. But it will affect everybody that you add to your, as an authorized user.
Oh, yeah.
It will affect their credit.
Conversely, you can remove people. So there was another purchase that I was dealing with that somebody's joint credit, because somebody says, oh, I'm gonna go ahead and add this person as an authorized user, but that person's credit card was maxed out. So the minute we remove that, because that person also had other credit history, her credit score shot up about 8 points, 9 points, and that's all we needed in order for us to get a mortgage, right? And we were able to do it. We were able to do a rapid rescore, and in 7 days we got a new score. So there's every person's situation is different, and that's why someone like Gizzy is going to tell you, right, to figure out what's the best thing to do.
Correct. Go ahead.
How old or how young should we put our children on? Just for that. Video mentioned.
Yeah, it's not going to report until I think 18. Right? If I'm not mistaken.
No, it should.
No. They gotta run an inquiry. Don't you remember? I mean, I'm Spanish. My mom had, you know, my mom had the light bill under my name when I was like 10. You know what I'm saying? So, if you Spanish here in Jersey, your mother.
Yeah, but light bills don't show up on credit report, right?
No, but they still run an inquiry. And in order for the bureaus to recognize who you are, you need to run an inquiry, because an inquiry tells the bureaus, all 3 of them, who you are, where you live at, and what's your SSN.
But the question, just I want to make sure we clarify that. So even though you can start adding her as an authorized user, will a score show before they're 18 years old?
Oh yeah. You can still have it. 15, 16 years old.
You can have a credit
I know
score?
people
Yeah, my daughter jokes around about having an 8.
So she has a credit score already.
750 credit score. And
okay.
Hers
So
is higher than
so
mine.
that's something I did not know.
Yeah.
I thought it took a while. So even better. So you can start doing that now.
Yeah.
Great.
So, I hope I get another 5 minutes. Okay, great. So, did you see when he said, get a secure credit card, and he went and he got another small credit card? That's if you want to get whatever you're trying to get, like now, just have those credit scores. But what about if you're a business owner? What about if you're already responsible, you make a lot of income, and you have small credit cards? You have no business with small credit cards. The small credit cards are the worst credit cards to have because they are easily maxed out, and if you're late on a small credit card, like really you were late on a $300 credit card, my main thing is you add an authorized user that is a high limit authorized user, anywhere from $10,000, $15,000, $20,000 credit authorized user. Once that shows up on your credit report, the banks want to lend to what they see what is on your credit report, right? So if they see that you have a $15,000 credit card, more than likely they're going to count how much money you make minus your expenses, but more than likely you'll get another $15,000 credit card. All right, so whatever you're showing on is what they will give to you and extend to you as far as your revolving credit cards. So if you're a real estate investor in here, if you're a business owner, you don't want to deal with $500, $1,000 credit cards. You want to deal with $10,000, $15,000 credit cards, because let's say you need to use it as an emergency for your business and you need to run $5,000 and you already have $30,000 in open in limits. So that means you're only using 5,000 or 10,000. You're only using anywhere from 15 to 25% of your credit utilization, which your credit scores are still going to be in the lower to mid 750 credit scores. So always be mindful of that, because in the United States, let's keep it real, you can manipulate it. Okay? And I'm not trying to say manipulate it in a bad way. I'm trying to say you manipulate it to whatever you want it to do for your stuff or whatever it is that you're trying to make. Yes?
How soon after that can you remove the person off?
Oh, you can just ASAP.
Okay.
What happens when you add someone as an authorized user is you add them as an authorized user, and the envelope that comes in the mail is going to be in your name, right? And then whatever is inside of that envelope is going to have that person's credit card as an authorized user. Okay, it's your responsibility to either give it to them or not. You don't have to give it to them because your history has just gotten added to his credit report, increasing his credit scores. All right, and yeah.
I have one question for you. Let's say someone has 10 years ago, 12 years ago, they had a credit card or 2 or 3, and they just stopped paying or didn't do anything with it, and they have not applied for any credit since.
Okay.
Is there a timeline or time frame when that falls off, or?
Yeah, there is a 7-year, 6-month time frame where negative accounts will fall off your credit report organically from the last date that you made payment on that account.
Okay.
So let's say I have a collection, and let's say you have that collection, and it was 5 years ago, and you are now 5 years into your 7 years, 6 months. Let's say they offer you a settlement. They say, hey, can you pay for this? I will give you can settle it for 30%. What happens now is that you just re-age that account. And now, instead of you having 5 years into the 7.6 months, now you start at month 1, and that negative is going to be there. That's why I don't recommend people paying their collections account, because you may re-age those accounts. We recommend you remove them first. And then once they are removed, once they are removed, you could call to settle the account. Sure.
Right. Can we hold off all the questions for a little bit, and then he'll be wanting to extend his time?
Well, I wanna get into the process,
And
but
then after he's
this
done,
is
you ask questions.
this is also the process. But the bureaus have 30 days to get in contact with you. Any customers will expect a result between 20 and 30 days. We can remove all types of accounts, public records, foreclosures, short sales, collection, child support, late payment, repossessions, student loans. They all could be removed. And we also, do things our way. I know I have one more minute, but let's say if you want to get in contact with me and I give you a quote for the service, and even if you say, Gizzy, you're too expensive at the moment, I don't have $800, I don't have $1,000. We also have a $99 do-it-yourself credit repair system that you could benefit from. It has been sold over 4,000 times, and it sells every day. But that's for the people who want to do things economically and people who also want to educate themselves on the process. So again, this is all about being positioning you. Credit repair is all about positioning you to do what you want it to do with your credit. So if your main goal is to get a mortgage, the focus is to position you to get a mortgage. You don't need a 750 to get a mortgage in a good rate. All right. You don't need a 750, 790 credit score to get a good credit card. You want to be in position to do those things so that you can move on with your life. But so yeah, credit repair is a process. Remember to be responsible with whatever you are paying on at the moment, especially if you are in the credit repair process or right now. The credit card companies want to see that you are a responsible person. So make sure that you are able to show that on your credit report so that they can go and extend credit to you. Again, we commit to our customers until everything is removed from the credit file. Just because someone gives you, just because one bureau is done in 30 days doesn't mean that Experian and TransUnion will follow suit. Again, it's a process for each bureau to delete all of the negative accounts. Focal point is to get you guys into position to do what you want to do. Again, you guys can contact me. Gizzy Credit here. Thank you so much, Culture Estate. I'll see you guys later. I'm going to leave this on and the next speaker so you guys can see this first-time homebuyer seminar. Thank you so much.
All right, hey, we're going to do a little quick setup. I know we're going to introduce our next speaker.
Yeah, so if you guys have any questions, it's a great time to ask Gizzy right now.
Oh yeah, if you guys have any questions, but you guys already asked
You
me.
guys can have them. You already shut them off. I'm sorry.
Am I good? Any questions? I still have YouTube Live. I'm going to be educating other people. If you guys...
So, as far as your, how you charge, it's case by case or something?
Oh yeah, it's case by case. Because you may have less negatives than the next person who has negatives. So it's all based on how many negative accounts you have in your credit report. So you can have 1 to 20 negative accounts, but no matter what, you don't, like I've been able to remove in 30 days from one bureau like 23 negative accounts all at once. And everything gets removed from the credit report. And I have videos on my YouTube channel about me doing that. But I also have videos where it's taken me a process to position people to do what they want to do. Like I got a customer in Texas. His name is Michael. And in 6 months, he was able to get a car for him. In 9 months, he was able to get another car for his wife. By the 12th month, he was already purchasing a home. So it's a process, Depends on what you want to do. If one bureau gets done, we know banks that we could send you to where they're only going to run that bureau, and we know that you're going to qualify for whatever credit card you want from that bureau because you are in position to get funding. That's what it's called, funding, or get high limit credit cards. So we also have a $99 do-it-yourself credit card funding system that teaches you what your credit report needs to look like in order for you to get these high limit credit cards. We could do it yourself, we could do it for you, but we also charge 10% for whatever monies we get you in the credit card. All right, so
really quick, before we present the next seller,
Sure.
the next seller.
Selling property here today.
That's messed up. I'm not selling.
He might have a couple.
Hey, Gizzy, have you done anybody's credit? That
Actually-
are like here
Actually,
today?
Gizzy has a client in New Jersey, and his name is Hugo. Me. And I'll speak just really briefly about my experience with Gizzy and his team. The first thing is that if you look at the credit repair process as a cost, you'll never commit. That's number one.
Oh, yeah, that's true.
It's 100% an investment. The work that these guys do is, I can imagine, a pain because I've tried to do it myself, and that's how I lost my shape up over here. I lost my hair. So honestly, it can be Gizzy, it can be anybody. But again, don't look at it as a cost. That's number one. Number two, be patient, because he's 100% right. Some things fell off immediately with one, and it took almost a year. Number three, when it looks from a cost perspective, if you're thinking about monetary, money, the services that Gizzy and his team provide versus everybody else, number one, I feel like they're exceptional. Constant communication. Number two, from a cost perspective or a money perspective, I would have paid almost quadruple by now. I think Gizzy and his team have been working on my credit for over a year. It's good right now, but I can tell his team is trying to perfect it and position me to do whatever I want to do. But for what I paid versus what other companies will charge on a monthly basis, I would have paid almost triple to, if not 4 times over. So thank you. I really appreciate it, man.
Thank you so much.
But again,
he hasn't
give
been
it a
a
shot.
pain that much, but still a pain.
Come on.
All right, so
Oh, how cute.
yeah.
So how did you like him? Good? You guys learned
Well,
something?
thank
Great. All right. Well, I guess I didn't introduce myself before. My name is Sophie Ramirez, not Sophia, but it's okay. You can call me whatever. This is my partner.
Hi, I'm Anna Gravetto.
We're Boss Associates. That's what we call ourselves. We're realtors. But anyways, enough about us. Up next is our great, amazing lawyer, which his name is Chandra Singh. I was looking for a lawyer when I needed to do a deal, and the lawyer that I wanted to use, I was on vacation. So someone referred me to Chandler, and it was the best thing that they ever did, because Chandler is amazing. He has this amazing app, which is Track with Ease. I don't know how many times I've said amazing, because it's great.
You're amazing.
All your realtors need to use him.
Great.
Everybody who's planning to buy a house needs to use him. He is great. Or amazing. Well, anyways, without further ado,
Thank you so much.
Chandler Singh.
Oh, do I use the mic, or do I need the mic? That's for your purposes. Okay, great. Hello, everyone. How you guys doing today? All right. Great. I won't try and keep you in the basement too long. We have a nice lunch for you, and I just want to talk to you, very candidly about the home buying process. So again, my name is Chandra Singh. I'm a licensed real estate attorney out here in New York and New Jersey. Predominantly New Jersey is my practice. I've been doing it for about 18 years now. Some people say, "Oh, wow, you look pretty young." That's the dark and lovely in my hair, so don't be, confused. I freshened it up this morning for you. But realistically, I've been a part of about 5,000 plus real estate transactions in my career. I'm also a licensed agent, so I sold real estate when I was started at 18. So I have a pretty fresh perspective on real estate in general, from both the agent perspective and as an attorney, of course. And I just want to talk to you candidly about the process and just ask you a couple questions while I do that. So first and foremost, has anyone, I know you're a first-time homebuyer seminar, but have anyone been a part of a buying process with like a family member or a friend or, at a time? Okay, cool. So some of you are familiar with it. Others are this is just the first take. So I'm not going to get into the really technical aspects of it. You'll hear from people sometimes, there could be horror stories about the home buying process, but really it's pretty simple, and it's a team sport, real estate. I'll tell you that first and foremost. So you have to work with a competent realtor, like the people here, mortgage broker. If you're looking to improve your credit, guys like Gizzy, to be honest with you, Gizzy did my credit as well. So I bought a lot of property in the high real estate market, and unfortunately the market crashed in 2008 and my credit was impacted. And after a long search to find someone who could do credit repair, I came across Gizzy, like most people, on a live feed somewhere, and he started working with me, and it exponentially improved my own credit. So I'll give you that little tidbit, and I thank Gizzy for that.
Thank you.
So without further ado, I'll just move forward through my presentation. You can stop at any time if you have any questions. As first-time homebuyers, I'm just going to candidly talk to you about some of the things to look for. And like I said, when you get to that time where you're buying, you definitely want to work with, a good team.
because between the attorney, the mortgage broker, if you're working with someone who's going to help you, get to the point of buying, say with credit, realtor, your home inspector, things like that, they all work together to get to a common goal of getting you closed on time in the house that you want to buy. Maybe your first home that you're buying, and then start, and then obviously people move on and buy second homes and so on and so forth. So, not really going to talk much about my background. I've just been involved in real estate for a very long time, so it's about 22 years now, and dating myself saying that, but yeah, I've been involved in it for a while. So let me take you candidly into the process, right? So what would happen is, once you get to the point where you're qualified with a mortgage broker, you'll start looking in an area that you're interested in to find a home. Of course, you'll work with one of the agents here. They're obviously extremely good. They have, I think, the top office here in Scotch Plains. They're doing really well. And I have the privilege of getting to know and working with some of the finer agents here. So once you do find that house, then there's a whole legal process that happens, right? And I want to explain that to you, but I also want to give you some things that you can remember that you want to focus on, right? So first and foremost, and people, I want you guys to understand, when you find that house and you put an offer, and that offer is accepted by the seller, in New Jersey, northern New Jersey, and central New Jersey especially, there's a concept of called attorney review, right? So what that means is, once your offer is accepted, you don't have a contract legally in New Jersey yet. There's a 3-day attorney review period. Now, that process can be extended mutually by the attorneys, but what happens a lot to buyers, and especially in this market, because right now we're in a very significant seller's market, and now even though the interest rate has risen, 0.75% in the last 12 months, we're considered to be in a seller's market right now, meaning anyone who has a decent property and is putting it on the market is getting multiple offers. And what that means for you is that you've got to be able to get in and out of attorney review very quickly if your offer is accepted before someone else comes in on top of your offer and outbids you. And that happens a lot. So that's why our agents actually like us, because my office just 100% real estate 100% of the time. We never go to court. We never leave the office. I chain them to the desk for the day, for the 8 to 8, right? The staff. And we just process real estate law. It is that kind of business where if you're not doing it full time, you shouldn't be doing it as an attorney, to be honest. Because attorneys that go to court and aren't in the office to deal with the fires that could come up in this business are doing a disservice to their agents. That being said, you're not under contract until you're out of attorney review. And just to quickly explain that process, most attorneys, and I actually have an outline in my pamphlets that were handed out with my law firm information and my card and some of the details. I have a first-time homebuyer tutorial in there. It's a 1.5-page read, so you guys can look at it whenever you can, which explains the process. But attorney review is just, say I'm working with you, and what was your name? Padara. Say you're my client, Padara, and the best way to explain this is by example. Your offer is accepted, right? They take you to a house, you get that offer accepted, you're super excited. They refer you to me, I'll talk to you real quick, and then I'll send a letter to the other attorney. I'll say, I'm representing you, and I'm adding a couple of terms to the contract to better protect your rights. All of these offers that the agents use are a standard offer form that's basically created by the state, the Board of Realtors. Some offices have different variations, but it doesn't become a contract until your attorney looks at it and reaches out to the other attorney. So Padara, what I would do is send a letter on your behalf, so I'm representing you, and I'm adding, I want to give you more time to get the mortgage, I want to give you more time to put up your deposit, and we want the seller to make some more representations about the property. Like one big thing that comes up in New Jersey are oil tanks, right? So back in the 80s and 90s, it was acceptable to leave the oil tank underground and decommission it with foam or sand. And that's what most companies did, because sellers did, because that was the cheaper option to do. The law hasn't changed, but what has changed is the understanding from sophisticated buyers with the advent of the internet and dissemination of information, that oil tanks that were left in the ground have leaked post-decommissioning, meaning they were supposed to clean it and get it out of the ground, or decommission it in the ground so that it was safe, but 20 years later, the tank still had oil in it, and it rotted out, and it leaked. That creates an environmental issue for the seller and for the potential buyers now in the 2018, right? So I see 100% of the time that sellers who have a tank in the ground, we almost 100% of the time, my contract writer says, if you have a tank, and whether you decommissioned it or not, we want it removed. Because you want your kids to be able to play in land and soil that's not contaminated, right? I mean, most people would agree with that. So that's something that goes in my attorney review letter, to better protect your rights, right? Because what happens is, and the rights of my agents, what happens is, if we don't do that, you buy this property and there's contamination or something, and we let you close with the tank that's in the ground, who are you gonna look to 15 years down the line or 10 years down the line when something happens, or you can't sell the property because the tank is still there. So you gotta be conscious of those things and who you work to, but any attorney worth their salt who does this business will be able to represent you in those regards, right? So attorney review, very simply, is just sending a letter, receiving a letter back, and having what they call a meeting of the minds, so that both you, right, Fedora, myself and you, and the other attorney and his client agree on the final terms to the contract, and then we have a binding contract in the state of New Jersey. Nobody else can put an offer on that property. That house is yours as long as you can meet the dates in the contract, like put your deposit, do your home inspection, and get your mortgage, right? Those are the three keys. I'll take care of everything else, title, survey, and all that, which I'll explain quickly, but those are your responsibilities. Make sure you put your money down, make sure you do a home inspection, and make sure you apply for your mortgage, right? And we help you with that process. We basically remind you to do that. So inspections, this one's important. A lot of first-time home buyers, and I work with a lot of first-time home buyers in my business, they have an expectation, and I always try to educate my agents when I speak at events. They have an expectation that when they're buying a house, that they're getting the Taj Mahal, like it's a brand new property, right? Because they're first-time home buyers, so they don't know better. So when I was a realtor, and now I tell my realtors, and when I talk to you, Fedora, I would tell you, so Fedora, look, you're going to do a home inspection, right? Now, I don't want you to have delusions of grandeur here, because what you're looking for when you do the home inspection are major structural defects with the property. Those will be plumbing, electrical, roof, foundation, oil tank, asbestos, things like that. You don't like the paint color? That's not, you know, we can't make a representation on that. There's spackle and paint issues. No, we can't do that. The floors are scratched. Well, you saw that when you went into the house. Sorry. Like, I'm trying to build a realistic expectation for you, not to go in there and think that you could just ask for everything, right? Another thing that happens a lot is that every house has mechanical systems, right? So mechanical systems are the hot water tank, the furnace, and I'll say the roof, for lack of a better, terminology, say the roof. Now, if the roof is 30 years old, but it's not leaking, right, the seller doesn't have to replace it. They don't have to do anything. Even if the shingles are curling a little bit, they don't have to do anything. People go and they have an expectation the roof has 4 layers, they have to re-roof the house for $15,000. They don't have to do that. Now, if the roof has a leak or it has patches that are, there's a lot of wear and tear, we can ask for repairs. But the essence of contracts in New Jersey are as is, meaning you have an inspection right. The seller is selling the property to you as is, right? So if you do your inspection and you find structural problems and they don't want to cure it, then you both can walk away, you get your money back. That's basically what happens. And it happens about 10% of the time. I see 10 to 15% of the time we can't resolve inspection issues and the deal dies. Mechanical systems like furnaces and hot water tanks, they have a certain shelf life, right? So a hot water heater could last 12 to 15 years, right? A furnace can last over 30 years, right? The fact that the system is old doesn't mean that the seller has to replace it. So be conscious of that when you look at houses and you walking around. I mean, people walk into a house and they're just like, oh my God, it's so beautiful, like I want this thing. But I would say to you, suggest to you when you're looking at the house, to maybe take a quick look at the water heater or the furnace when you're in the basement. Just look at the date on it. Because if it's working and it's 45 years old and you make an offer on that property, you're probably going to have to close with that furnace. They're not going to replace it for you. unless it's not working at the time of your inspection, right? So the fact that a system has reached its useful life does not mean that the seller has to replace it. So keep that in your mind when you're making offers. If you think to yourself, oh, I'm gonna wanna replace the furnace in this house, but the furnace is 40 years old, and I'm telling you or suggesting to you that that seller is not gonna replace that furnace. That could be a $10,000 change, $8,000 change, right? So just telling you to keep it in the back of your mind. So that's the home inspection. What happens, Fedora, you do a home inspection, we would talk about the report, you would tell me what the problems are, I would send them a letter, we have a back and forth negotiation, and then at some point we have a resolution. Whether it would be, they're gonna give you, there's a couple of ways inspections get resolved. One is, they're not doing anything, you accept that, cool. They're gonna give you money back, and you accept that, or they're gonna do a mix, where they're saying, oh, we're gonna fix these 3 items, and we're gonna give you $1,500. And then, for the most part, you probably just take it, right? So, that's the home inspection, right? Continue about that, I just talked about what those things are. Mortgage contingency, I'm not gonna really beat this to a dead horse, because he's gonna have a very, nice conversation with you about mortgages after, and I've done a lot of work with him. We actually speak together at other events, and his work is impeccable. So, basically, what I would tell you about the mortgage contingency is to stay on top of that date, right? The contract is gonna say, Fedora, I normally give you 35 to 40 days in my rider for you to get a mortgage. So if you know that, they got to start the process right away, right? I have clients that are like, oh, well, I'll wait 2 weeks to apply for the mortgage. I wait till I do my home inspection to apply for the mortgage. I am suggesting to you not to do that, because those clauses are mutually exclusive. So if you wait for your inspections to get resolved, that can happen 2 to 3 weeks after we get under contract, and now you're behind the 8 ball to get the mortgage timely, right? So I would suggest to you, everything happens in conjunction with each other. You send your deposit, you do your inspection, you apply for your mortgage all around the same time, which is within a couple days of getting under contract, right? So I'll move on beyond that. This is some technical stuff, but I just want to, explain to you it. So every property in New Jersey, when you buy it, you have to order a title search, right? And basically what that is, it's a one-time insurance you pay to protect you against any loss, right? Because usually for people buying their home, their first home, or whatever home they end up in at the end of their life, is their biggest investment, right? So you want to protect that investment. And how you do it, besides getting home insurance to protect in case, it burns or you have a flood or something like that, is you have to get title insurance. And what that does is it insures you against any kind of defects in the title, any kind of taxes that are owed, anything unscrupulous that the seller may have done, and seller judgments, and also just protects you against loss overall. It's a one-time fee you pay. It's not like car insurance, which is payable every year. It's an insurance that you pay one time when you buy, and you have it for the life of the property, that you live in the property, right? The other thing is the survey is a technical drawing of the property. I have clients who come to me all the time, and they're like, oh, I want to save the $700, I don't want a survey. And I just tell them I can't work with you. Or you have to sign a waiver, because for me, buying a property without a survey is a tantamount to driving your car without car insurance. Because I have been involved in a lot of transactions. And I've seen, the reason why I came to this position is because my own father was buying a property one time, and I was 24, just got out of law school. And I was working with a firm, and he's like, let's just close, no survey, no nothing, right? So we closed. And then turns out he was buying a 50 by 100 lot, and the survey came back after we closed, and the property was only 25 by 100. The other 25 was owned by the city of Englewood. So it took us 2 years to get a deed from the city of Englewood for the 25 feet that we would have known wasn't ours if we did a survey. So that was a very early introduction to malpractice. Thank God it was my dad. But we learned, and I was working with a firm at the time, so I'm not going to take full responsibility, but we learned that never ever buy without a survey. I just highly recommend it, because you might want to put up a fence, you might want to do a deck, you need a survey in order to do exterior work to the property, right? So if you were going to do any exterior renovations to the home or expand its footprint, you need a current survey. Most lenders now are going to require that you have a survey. You can use the seller survey if it's within the last 10 years. So part of my attorney review is asking the seller, if you have a survey within the last 10 years, would you mind signing an affidavit that we can use that and close? It saves you $700. Most people want to save $700, but I would recommend don't ever buy, no matter who you ever work with, without getting a survey to your property, okay? Preparation for closing. So people always have, like, how's the closing process? What happens at the closing? The closing is a very simple process. Basically what happens is 24 hours prior to the closing, you'll get the numbers from the bank and the title company, right? They will email or call you and say, you have, your closing is tomorrow and on Monday, and you have to bring a check for $25,000, right? You would bring that check payable to the title company, and they do all the disbursements. It's a very simple process. Closing actually takes about an hour, depending on the package from the bank. So the closing process could take like an hour of your time on the day of closing. You will do a walkthrough with your realtor, so you'll set up to do a walkthrough. What a walkthrough is you do your home inspection, right? Seller's going to make repairs. Plus they have to move out, right? So the walkthrough is to make sure the house is in the same position that you saw it when the home inspection was done, and that the home inspection items that they said they were going to fix are completed, right? So you'll go into the home and you'll see, oh, they're going to fix the faucet. They have a leaky shower head. They were going to do this other fix for you. You go and you check that out. You flush the toilets. You run the hot water. You make sure everything's working. You turn on the heat. You spend like an hour at your walkthrough, just making sure the house is still, because it's going to be yours, right? The minute you close, the house is yours. I had a situation one time that we were about to close. Client went to the walkthrough, right? The closing was not until 5 hours later. Turns out, I don't know who did it, somebody left something on during the walkthrough, right? And the house got on fire. And when we got to the closing, somebody called guy and was like, yo, this house you're buying is on fire in the back. There was smoke bellowing out. They hadn't closed yet. They weren't the owner. So what happened was the closing got canceled. The homeowner's insurance paid for the repairs, but we had to wait like 60 days to close, or like 90 days. It was a long, long time ago. I don't remember. But if they had closed, like actually took the deed from the seller, and that house burns down, you now own a burned down house. Like, there's nothing you can do. So that's why once you close, you own that property and all of its problems. So, and all of the happiness it's going to bring too, but I'm just saying that's why when you do the walkthrough, you make sure that the stuff is working, right? Because I just got a call yesterday. My client closed on the house, and well, I was representing the seller, an investor, and we sold the house on Wednesday. I got a call yesterday, the hot water's not working, they're at Holiday Inn, the buyers, and they calling me like, and sometimes you have to be stern in this business, and I told the attorney, I said, well, did your clients do a walkthrough? They were like, oh no, they skipped it, they just wanted to come to closing. And I said, and they have a busted hot water tank, my client's not gonna do anything. I'm not gonna call my client. That's it, that's really the bottom line. So, that's what I'm saying, protect yourself, right? And then the closing happens in two parts. Last thing is when you close, the documents get recorded. You get copies of everything. The deed gets recorded in the county, wherever you buy. That takes about 90 days to get recorded and come back, and then your attorney or your title company will send you a copy. They'll send you the original deed recorded. A lot of people have this thing about that they need their original deeds. I gotta have my deed. As long as you have a certified true copy of your deed, you're fine. You don't really need the original, because the original is recorded and it's of record, and whether you have your original deed or not, it doesn't matter, right? But there are people who get hung up on like, oh, I gotta have my deed. You really don't. As long as you have the copy and it's a certified true copy, and you get your title policy in about 4 months, then you're fine, right? Lastly, I would tell you, again, so I've been doing this for a while. We have a pretty good process and system to work with our buyers. Like she mentioned the NAP we built for the home buying process. And what it does is it takes a lot of the human element out of it. Meaning, I'm human and I'll forget to follow up with you about your deposit, right? Because I'm representing 100 other buyers. Right? You're busy because you have a life too. You're working, you have your girl, you have your kids, you have whatever else is going on. And there are very critical dates that occur in a real estate transaction. There's about 5 to 7 critical dates that happen in a transaction. Some of them pertain to just me. Most of them pertain to just you. Deposit, inspection, appraisal, commitment, sellers, COs, which is a certificate of occupancy, because the town has to come and inspect the property. 90% of the municipalities in New Jersey have a CO requirement, meaning when a seller is selling the house to you, they have to have the town come to inspect it to make sure that it's habitable, make sure they have carbon monoxide detectors. That's big now because, obviously that's a gas you can't see, and have smoke detectors. Right? Every municipality has a smoke, it's state law. Every municipality has a smoke detector requirement, so you'll know when you move in that the house has carbon monoxide and smoke detectors, which is obviously there to protect your family. But like I'm saying, these critical dates, we take the human element out of it because the application we build basically contacts you to remind you to do things. And once we get out a review, we set that up. So myself or the girls here in the office, we don't have to really reach out to you to do that. It will continue to follow up with you. All right, we'll say, have you sent your deposit? And until you reply yes, it'll email you every day. Right? So it's going to get annoying. It's going to get on you because we know how critical these dates are. So we want to make sure that you've handled the business. You know what I mean? Because we're going to handle it on our end, what we need to do for you. That being said, guys, 20 minutes. Good. So 20 minutes. That was my presentation. And I'm willing to obviously take questions. My paralegal is going to be here in a couple of minutes to take questions. And we have a great lunch for you. So does anyone have any questions about the process? Yes, sir.
Do we have a soft copy of the legal process for the first-time buyer?
Yes, it's in the pamphlets. There's a pamphlet in the folders about the process. Yeah, and it's written from my experience as a home buyer myself, attorney, and realtor. Any other questions?
One other for me.
Sure.
How much does it cost to remove in Wildtown? I'm just curious.
About $1,500.
Oh, that's not expensive.
That's not expensive, but the only thing is this. So the actual just removing of the tank is $1,500, right? If the tank has, what happens is this. There is a law in the state of New Jersey. So when you pull the tank out, if the tank has holes in it, then there's like an automatic process that comes down that's state regulated by the EPA. So what happens is the person who's removing the tank, say the seller, is required to take at least 4 borings or soil samples of the soil underneath where the tank was, where the holes are. Those go to a lab. Based on the parts per million of oil within the parts per million of the soil, if it is seen to be contaminated, then you have to get an estimate for decontamination, which is the earth underneath has to be removed.
You gotta dig it up and...
Exactly. So that cost can fluctuate between 10 to 80,000. Like that's where the big money comes in, because removing the earth and getting samples that are, obviously, under EPA guidelines is a big deal. The other bigger deal is if there is water, underground water under that home or whatever, and the oil seeps into the water, then you have a bigger issue, because that kind of cleanup is not very easy. So that's the cost, and those are the things related to that. That's why we always tell our buyers, if you're buying and there's a tank left in the property, that they need to remove the tank. So I would definitely tell you that that's highly recommended. Any other questions?
Thanks for all the details.
Of course. And you have my cards there in the pamphlets. If you just want to ask a question, you can email us. We're very responsive. Even if we're not representing you and you just have a question as you're getting going with the process, just let us know. We're pretty flexible, and my staff, there's 3 of us in the office, and including myself, there's 4 of us. So, and like I said, real estate law is all that we do. Good. Without further ado, let's have a great lunch, right?
Yes.
Thank you for your time.
All right, come on, guys. Have some lunch. Bring it back.
You can help yourself.
Yes.
You can bring it back to the table. We'll continue. Have a working lunch. I just want to, I'll move this because I don't want anybody to trip over. Do they know it's another section?
How was that?
Hey, you did awesome, man. Nice job.
Can't smile on the mask. Nicholas says smile, and then he has written on the paper for me to smile. I'm like, can you never also
Really?
tell me?
Wait, who has it written on the paper? You put it up.
You put it in your smile.
Yeah, he's hilarious. He's hilarious.
Yo, what happened to this? Who touched this? Get the boy.
Nice to meet you.
Who touched this? Sorry? Who touched this?
I didn't. I probably should have been here watching.